Good, how are you, Judge?
Doing well. I've got 2 o'clock, so I'll go ahead and call this special meeting to order. This is a special meeting for County of Starr, Monday, June 29th. It's 2 o'clock and we're in the annex conference room. Let the record show that we do have quorum, everyone being present. Everyone will please stand for the allegiance.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
We have claims.
Yes, Judge, we have claims they've been reviewed and I recommend for approval.
I do some more, Your Honor.
Second.
Moved and second to approve discussion. All in favor, please, aye.
Aye.
Opposed? Motion carries. Moving on to item 5, this is on the audit. Ms. Eleni.
Yes, Judge, we have our external auditor, Raul Hernandez, presenting the September 25th, September 30th, 2025 audit.
Okay. Okay, Mr. Hernandez, I guess you want to start with which audit first?
Yes, Judge, we're going to start with the county audit report.
Okay.
That's going to be the larger of the 3. And if you'll go to page 16 of the audit, 16. And before I begin, just for the record, the auditor's opinion is unmodified, and that translates into a clean opinion. The financial statements are fairly presented in all material respects. The financial position of Starr County in accordance with generally accepted accounting principles. Page 16 is a statement of revenues, expenditures, and changes in fund balances for the governmental funds. Now, this is for the year ended September 30, 2025. The first column is your general fund. Total revenues were $23,071,719. Total expenditures were $24,210,545. So your expenditures exceeded revenues by negative $1,138,827. However, there was additional increases of other financing sources of $1,104,816. So for the fiscal year ended December 31st, 2025, your fund balance decreased by $34,011. Essentially, you can say you came close to breaking even. Still, it's a negative of $34,000. Now, you started with a fund balance of $9,653,845. And you ended with a fund balance of $9,619,834. Any questions on the general fund?
No, the additional revenues that you talked about, would that be the ARPA funds and that kind of fund?
The additional revenues would be transfers in that came in from other interfunds of $795,210, and proceeds from a new accounting pronouncement that was introduced 2 years ago, I believe, that results in recognizing sources of revenue, any new leases acquired during the year. In answer to your questions, those revenues would be reported under the total revenues. So these are additional sources. Right next to that, real quickly at the bottom, the road and bridge ended with a negative $27,782. To the far right, you'll see total fund balances ended at $32,460,296. Any questions on this? Now, again, while the general fund does appear to break even, you still end up with strong operating reserves. You have a positive unrestricted fund balance, and your liquidity is stable. And there's no really significant comparison to last year. It's certainly just basically, like I say, it breaks even. So now, when you ask yourself, well, if it breaks even, does that mean that really nothing happened from last year to this year? Not entirely, because you invested $5 million in infrastructure, which would include, buildings, office equipment, furniture, etc. So you invested $5 million, so your infrastructure increased by $5 million. As a result of financing where you sold bonds, and part of this bottom line, or this decrease, included the acquisition of this capital outlay. So a substantial increase to fixed assets, even though you broke even. So that is significant to point out. Any questions? If not, real quickly, let's go to page 19. So here, page 19 is the statement of revenues, expenses, and changes in net position, proprietary funds. You'll note that it includes the international bridge, the gas system, the transfer system, and then the total, and of course the internal service. The international bridge had an increase at the bottom of $373,005, and it ended with $3,143,892. The gas system had a profit as well of $227,873, and that ended with $570,268. The transfer station had a small loss of $3,128, and it ended with a negative $291,094. The total of all of these ended with $3,423,066. Now, the combined net profit, if you will, $597,751. Any questions on this? If not, let's go quickly to page 59. So page 59 is your schedule of revenues, expenditures, and changes in general fund balance, budget versus actual. In particular, the column to the far right-hand side. When you note anything that's got brackets, indicates a negative variance. Your revenues in total had a negative $844,515. So in other words, what you budgeted, you didn't actually meet by that amount. But it's always difficult to project your revenues, because you really sometimes cannot control that. As you look at the expenditures, however, there are some functions that do have negative variances, but again, not very significant. At the very bottom in total, however, total expenditures to the far right-hand side, a positive $500,976. Everybody see that? State law requires that you do not overspend your appropriations, and you did not. So while then in between you had some negative variances, in total you came below budget $500,000. Any questions on that? The remainder of the report is comparable as it's always been presented in the past. You underwent a single audit, no findings as a result. If there are no questions, that is the presentation.
Any questions or comments that you want to make? When you mentioned a little while ago that you know, I don't know if I understood correctly, but 2 years ago, something changed that brought in.
Okay, so every so often, there's accounting changes in accounting principle or changes in what we call accounting pronouncements. It's what governs how you present your financial statements. So a few years back, this new pronouncement required that you recognize any new lease, for example, a rent of facilities or a rent of equipment. In the past, you would merely just record the rent expense. The new pronouncement says you must recognize that as an asset now, with the offset being a related liability. So if you think about that, when I first saw this, it just was hard to agree to, but we must comply with the accounting principles. So you recognize a lease that you have in your possession, for example, let's say office space, and you're obligated to pay that per the agreement. So again, in the past, you just make a rental payment. The accounting treatment now is to recognize the asset where you have a right to that lease and the related liability. In its first year, you must recognize it as a source. And that's what you see as an other source. So in total, I think it was about $600,000 in new leases, okay, that you signed as the first year. So that is recognized as a source.
So that becomes a liability of $600,000.
Initially it did, exactly. And because you're always paying that, now in the past it was rent expense, moving forward, it's an allocation
And that
between
would
principal and
include,
interest.
copiers, backhoes,
Machinery.
anything that we need.
Machinery, exactly. That you used to rent,
Yes.
and now you're recognizing that as a
Because I was
asset.
surprised that, you know, I was expecting to have a bigger fund balance because we always leave money for a rainy day fund. So, but I guess it went into the new accounting system.
Right, see, because this really offsets the $600,000 that is shown as proceeds. The balance is to recognize it as an expense as well, so it balances out.
Even though the leases are leased to own, they're still marked down as that.
The ones that are leased to own are treated differently.
Okay.
These are just straight rent.
Okay, I got
You
you.
know, you sign an agreement to rent something for 3 or 5 years as rent, and it's not categorized as a capital lease, then it's shown in this manner. So it's really similar to one that you sign where you have the option to buy or acquire. Similar in fashion, it's just treated separately,
Different.
but the end result is the same.
Any other questions?
Judge, real quickly, in
Yes, sir.
in response to what you just said, back on page 59, when you expected to, at the very bottom, the second column, that's your final budget. You see the negative $795,288.
Yes.
So you expected to overspend by that amount. In reality, you overspent by 1.1. And some of these are related to the expenditure functions that are in negative. And those are related that, or resulted from salaries and some audit adjustments. But the reality is at the very top, the revenues. You were short $800,000. Now, you know, the biggest one being the charges for services and then the other revenues. The other revenues, and I talked to Letty about this because it is a large amount. That is made up of a capital surplus credit refund and the other big two items were donations and reimbursements from the Starr County, what is it, Democratic and Republican Party, Letty?
Yeah,
So,
the elections.
yeah, so that's where these other revenues are resting.
You know, one thing that comes to mind on that one, on page 59, at the very top on
Yeah.
property taxes.
Right.
It says that we collected less than what I had anticipated, 400,000.
That's correct.
less. Okay. Yet, and I guess this question will go to Letty. When we have Commissioners Court and our county tax collector comes in, she says we collected 97%, 100 and some percent. Why the difference? Why does it show that we did not collect that?
Because I believe she's probably combining everything else, the other entities, probably the debt service, the drainage. I think she's combining all other entities as a whole.
But
Because when,
she's-
And for the city, it's possible that we collect as well.
I think
Well,
it's the drainage, the ones that we manage,
Uh-huh.
I think she's combining those. Because when I present my auditor's report, I only include what's general fund and road and bridge separately. I do them separately to show what's coming in.
Okay, maybe we do need to change that, you know, so, because it's misleading.
Like on her report?
Yes.
Judge, if I may, what she's telling you is that 95 or 99%, that's collectability of current taxes, your current year valuation or your assessment. So I'm sure that's what she's telling you,
Well,
that she's
no,
collecting
because see,
current year
I
taxes.
budget, when we budget, I budget that we're gonna collect 85, 86% of the taxes that are relayed to us by the appraisal district. So I've already discounted it to project how much we're not gonna collect. And then she says we've collected 97, 99% of the amount that, which is that 14 million sum that you have there. But something's not right, you know.
In that case, you need to
Important.
revisit,
Mhm.
you know, the concept.
Okay. I'll give you that.
Okay.
Any other questions? comments?
Thank you, Judge.
Yes, sir. You want to go into the other reports, or?
If you'd like me to, yes.
Yeah, just a brief.
Real brief. The next one is the bridge, and that's beginning on page 9. And again, before I say anything, the auditor's opinion here again is unmodified, and that's a clean opinion. Page 9, real quickly. This is your statement of revenues, expenses, and changes in net position. This is your income statement. So net operating income, actually total revenues were $3,199,827. Expenses were $1,389,523. Here your revenues exceeded expenses by $1,810,304. Here you have other operating sources or uses, and that's a decrease of $1,437,299. So for the year, this shows an increase of $373,005. You ended with $3,143,892. Any questions on this one? And right there, Judge, you can see the activity on other or non-operating revenues and expenses, the investment earnings, the transfers out, the interest, and then the participation amount paid.
Any questions? Thank you.
And then lastly, the gas system, again, page 9. And Again, for the record, the auditor's opinion is unmodified, a clean opinion. You always want to get used to hearing that. Page 9, again, the statement of revenues, expenses, and changes in net position. Total revenues were $1,169,938. Expenses, $893,527. So here, net operating income, $276,412. That is decreased by $48,538. So here, your profit, if you will, $227,873, and you end it with $570,268. No findings on either one of these two audits, isn't there?
Any questions? Thank you, sir. Hernandez. Appreciate you making time to come over here. I know
Sure.
these are due tomorrow.
Yeah, we'll be uploading this to the Federal Clearinghouse this September. Judge, I've been absent a couple of years, and your staff really has enhanced their abilities, and they're doing a very good job.
Okay.
Certainly, the audit was smooth, if you will, and you have a strong financial entity here overall.
Thank you so much. Appreciate it. Okay, I think that was. I guess I'll entertain a motion to approve item 5, 6, and 7, which is the audit for the 3 that have just been presented.
Motion to approve items 5, 6, and 7.
Has been moved in second. Any discussion? All in favor, please, aye.
Aye.
Opposed? Motion carries. Item 8 is just a budget amendment. That's what I need to say.
Yes, Judge, the budget amendment's in order.
Motion to approve.
See it.
Second.
There a motion to approve?
Motion to approve.
Move second. All in favor, please, aye.
Aye.
Opposed? Motion carries. And again, thank you, gentlemen, for making time to come out here today.
Motion to adjourn, Your Honor.
Yes.
No.
All in